Good afternoon and welcome to the end of day review for today. And today is Tuesday, the second day trading of this week. And we are in the week 16, which is the third week of this quarter, right? The third week of this second quarter. So April is the first month of the second quarter of this year. And today or this week we don't have much high impacts or breaking news. We did have a little bit Jerome Powell create a little bit market movement, for the lack of better word, today around 1:15 p.m. and we can see when we go into the chart, we can see that the market go through a little bit volatilities, right? A little bit movement, or it's a huge movement when he said that maybe the Fed will not cut rate yet. So that's how the market react, because rating interest rate is the theme right now. Interest rates, or they call regime. The regime right now is about interest rates and the CPI. So whenever we have those new, the market will whipsaw, or the market will very volatile, or it go through a lot of volatility right there, volatile and volatilities. So before we go into the review today, let's review a little bit about yesterday. We're gonna take a look at the daily time frame, right? Daily time frame we annotate is D1, which is D is for day, and D1 is just for 1 day. All right. That's our annotation. And if you notice that we just switch our background into white, and the color of candle will change. The reason why we do that is because we believe that the emotion, the color of candle really invoke the emotion at a subconscious level or unconscious that we don't even know. And that's how we react. Especially the red one and the ring one, right? When we see red, we got panic, even though we don't. But at the subconscious level, that's how the color generates the emotion. So that's the whole idea that we start from this week. We just try to keep things simple, just black and white in terms of the chart. So that's easy. Keep it, stay calm, emotion neutral, or emotional neutrality right there. We try to say neutral. So that will help her to trade better, because trading is all about motion, manage our emotion. It's a decision making, and our decision making is influenced by our emotion. So that's the whole idea right there. We try to change the color right there. So by the way, before we go into, we should remember yesterday, right? Yesterday we have a huge break on Friday. We confused. Before that we kind of a little bit confused. We see, right here we see the gap down and then the gap up. It rate the buy side liquidity and we saw the diversion from the NQ, so we know that market's gonna be shipped to bearish. Then we're ready for that right here. It just confuses us right here. We're ready for us. We see that, the breakdown right here, the failure gap right here. So basically it's order block failure gap retest. But boom, on April 5th, which is Friday, the non-farm payroll is kind of reversed back. Wow, so we kind of reverse very quick and very decisive. So we kind of take it back. We thought, wow, it may continue to rally, but if we look at the next day, which is the Friday right there, and then the Monday, and then boom, the Tuesday right there. Tuesday is the high, and then the Wednesday. No, not the Wednesday. This is a 11. 11 is let's look at the calendar. Yeah, 11 is a Thursday. So the Thursday right there, it also reversed back. You see, 10. Yeah, the 10 is Wednesday. The 4 is the Thursday. It's a non-farm payroll right here on the Friday 5th. So we kind of confused, but now after what happened yesterday with the huge Dow close candle, it's a displacement. This is also displacement. So that helps us to understand that when we see the huge displacement, the next day we come with a strategy to trade the next day. So basically when we have a displacement, here like this break down a level right there. In this case, it break this level on the daily time frame right there, which is 5170.5 right there. Then the next day, there are 3 scenarios for the next day. And here's our journal for today. And here's our observation, and that will help us to make decision better. And after displacement, what gonna happen? The 3 things gonna happen, 3 scenarios. There are 3 scenarios. We need a spelling test right here. Okay, scenario. There are 3 scenarios. It doesn't have to be in this order, right? But basically the first one, the easy one, it could be a reversal, which is a 4 breakout. That's the most common one. And the second scenario, it also common. I mean, it can be 50-50 between the 1 and 2 right there. But even though it's 50, we still manage, to become profitable if we have a risk to reward ratio, right? And then we still manage. Good. You can follow through. Or the third scenario is going to be a doji candle or doji day right there, which is range and accumulation. And look, yes, So yesterday, how do we know to trade the next day after a displacement? I think we did find a secret, for lack of a better words, a trigger that helps us to trade better on the next day. Because it caught us surprise yesterday when we tried to go long, and when we reverse engineer, you see what the mistake we make. That's what we discover this idea or this concept. We make mistake and perfect, and we learn from our mistake. That's the beauty about mistake. We have to enjoy making mistake, or we love the mistake. Don't try to avoid making mistake, because making mistake is where the learning comes from. And it's no fun at all. Making mistake is no fun, especially it really hurt our ego, right? The ego don't want to be wrong. But that's how we learn. We have to soften our ego so we can learn. Not afraid to make a mistake. We're going to look at the mistake we made yesterday on a 15-minute time frame. By the way, today we switched from 5 minutes to 15 minutes because the idea that it's easiest for it to trade on a 15 minutes because we use the high time frame, which is the 1 hour. So 1 hour is equal 4 candle of equal 4 candle of 15 minutes. So it's easy for it to trade. We usually use 5 minutes, but now we switch to 15 minutes. And also help us to slow down ourselves. Otherwise, we could have a issue. The challenge we have right now is FOMO. We just try to trade every move, and we lack of patience. So we just make some adjustment right here. Our goal is not big at all. It's just try to improvement, make a small but improvement every day. That's our approach right there, so we can better ourselves right there. Okay, so that's how we should. Okay, yesterday we make a mistake. We go along right here. We say, wow, is the hue, feather gap right there. You see, we identify this level, and we see the feather gap down and feather gap up, and we thought that this is gonna be a retest. And also, if we look at this level, is a bullish breaker for that matter. Yeah, because we buy it, right? We want to go along, so we say, oh, it's bullish breaker, follow up. This one just a retest, so we go along, and we got caught up. The same rate area. We see the feather gap down, feather gap up, and we thought it's gonna retest, and we go along. So we have made the same mistake yesterday, and when we after the trading we go back and review, we see that we make a mistake. Right, the mistake we make is we go along 9:30 and 9:45. We should have short them. The reason we short them because if we look at the 1 hour time frame, we can see the logic that the setup that we need to short them right here. So why we need to short them? What the trigger? Okay, because we go back to our scenario. After displacement, there are 3 scenarios. It can be reversal right away, or it can be a follow through, or it's gonna be a doji candle like this one today. You see that? After displacement, you see the doji. In this case, you see doji. And in this case, you see the reversal right away, reversal right away. So, but if we see this condition, we know it's going to be a follow through. The first consideration we're going to see is that we see that the next day it opened at or below the close of the prior day, and then it retests the high. And how to retest it? That is where the Judah swing prior to 9:30. That's where the ICT concept playing right there. You see right here, that is the Judah swing that ICT talking about right here. So it's pretty much, you see that it open. In this case, it's open. It's open at 9:30. No, it's not open 9:30. It's open at the Judah swing. No, it's Judah swing at 12:30. At 1:30. We want the Judah swing right here. We want the Judah swing prior to 9:30 right there. The model 211. And that's what happened. You see that this is the wick, right? The wick of the candle is that the Judah swing before 9:30. That's explained a lot to us right there. That's the case. So we can add a note to right here. Model right here, 211. We can add a note right here to help her to handle this setup better. So basically, if the prior day is a displacement, and is open at or below the prior day close, then it is likely a follow through day. So that is our note right there. Look at it a little bigger. Alright, so if the prior day is a displacement and is open at or below the close, below the prior day close, then it's likely a follow through day. And we can put a note right here. The Judah swing prior volatility is the wick of the daily candle. So and we short them, just short, short at night. Yeah, let's say that we that's that observation right there. What put right here, and let's save it. Okay, so that is the verbiage right there. If the parameter is displacement, it open, and we know that the Euro swing prior is to create a wick of the daily candle. Then we can short them right there at open. Short them at open 30 or so at 9:30 open or 9:45 right there. So in this case, it's a if we want, we can put a buy stop right here or buy stop at this level for breakout. Yeah, it will look low time frame. That's exactly what happened. You see the gap up and it will break it. So we have many level to enter data, but the whole idea is there are three scenarios right there when we have a displacement. Let's recap this idea because we want to take it slow. So we go through this idea so it gives us time to dissect the information. So basically right here is the big picture, check before the Monday open for that matter. So basically we have a displacement right here. It breaks this level. Then we have on April 12th, this one is April 5th. This one is April 5th. I think we need to put the edit right here. Where's our edit? Yeah, with the day rate, but basically this candle is April 5th. It's a Thursday. No, April 4. Sorry, right here we have picture right here. The time frame April 4, which is the Thursday before non-farm payroll, and then you have payroll right here. So basically here, this one is close below this the displacement, the close of the displacement right there, which is signal just is a market structure shift, for lack of a better word. Basically a bearish order flow forming. Then the next candle for us is gonna be a doji or a follow trend candle. We have to add one more scenario over here. Let's add one more scenario over here. I think let's open this real quick in with the pen. So right here, we need to add one more channel. Yeah. Let me make this scenario right here. Let look a few. Yep. Yeah. After a displacement, the three scenario, right? First is reversal. In this case, you see reversal right away. Second, we see a follow through. And then the third one, we see a doji, which is accumulation right there. We can both them. So that's an idea. So we observe that. Then how do we know it's going to be reversal or going to be a follow through? Then if the next day something happened, save it for now. Let's open again, see if reflects. Then they go here, we save it. And go back to our Monday, the before. Yep. So what do we have? Let's close that. Yeah. So we just update our screenshot right there. Then let's look at the after, not the before. Here's the after. So we have three steps right there. The first one, you have displacement. Second one, you have the another displacement break that level, which is a market structure shift, or it can be a confirmation like that. You have displacement, confirmation, which is break that level again, make another level again, and then you have follow through. And it's gonna be a follow through if it open at or below the Friday, and there is US swing prior to 0930, then it's likely a follow through there right there. If it is a doji, then you see that it will not create a Judah swing prior to 930, which is the perfect scenario for today. Look at today. Today is a doji. You see that? Today is doji. Yesterday is a follow through day, but also it's a huge displacement. So we have two displacement consecutive right there. Then how do we know this day going to be another displacement with follow through or going to be a doji? And today offers a beautiful example of the doji. In the doji, look at the low time frame, we don't see the Judah swing. Yeah, we do see that it opened just below or at the level of yesterday, but we don't see the Judah swing before 930. We don't see that. But yesterday we do. You see the huge euro swing up right there. And you see the London, the London is consolidate and then boom, the euro swing. But for today, we don't see that. You see a little bit consolidation right here. From this area, they are consolidation. And then you see the euro swing. They are consolidation. And you see the euro swing start at 8:30 until 9:30, it's 1 hour. But for today, 9:30, 8:30, 8:30. Yeah, today we don't see the euro swing at 8:30. Start from 8:30. We don't see that. Maybe it's euro swing low. If that's the case, that could be another scenario. Oh no, we're talking about the euro swing before the 9:30. Oh yeah, this happened before. And it check out the London low, which is around this around area right here, from 2 to 5. Euro swing, that is where the follow through gonna be happen. And today we don't see that. We did see a little bit right there. Yeah, today we can see that also. Oh, okay. Yeah, today we can see the euro swing. We can target the euro swing, the low of the London low. That look ICT right here. Yeah, the low of the London low right here. Euro swing. Prior. Short them at 9:30. Yeah, we short them at 9:30. It's not exactly right here, but it's not much movement right here. So our goal is to identify the follow-through day. What the difference between the follow-through days and a swing, a dozy day. Today we identify it level also. We don't see that any photograph here right here at this level. You may say that we have a fellow gap down right here, but we don't see a fellow gap up at all. You see this? Not fellow gap at all. So that means that there will be no swing, prior swing, no a euro swing prior 9:30 setup like ICT. Because if it does, then you will see that we see the low time frame, which is 50 minutes. We see the fellow gap right here. See the fellow gap right there. That's the setup to short them. But today it's not there. You see not fellow gap at all. Up and then down right away. Not much fellow gap right there. So it's not gonna be a euro swing. So we're not gonna short at 9:30 and have a follow through there. It's gonna be a range day. And also we look at the DR model, the range on the Q3 is a very small range. But if we compare to the range yesterday, you see the Q3 right here, it's a giant range right there, and it's just a retracement and then pull, make a second leg down right there. Yeah, so that's the whole idea, that how we anticipate the next day or the next candle. In this case, we use the daily at the high time frame, then the next day is the next candle. And the next candle is the next day. But if we use 1 hour frame right here, the whole idea is the same. So you have huge displacement right here. So the next hour gonna be a follow through or gonna be doji. In this case, it did not break this level, but it can give a little bit run right there. And this also give us some learning right here. So after displacement, this one reverse back right away. Reverse back right away. And after displacement, this one become a doji right there. So it's covered 3 scenarios we have. This is the one yesterday had happened. Displacement right here, and this one create a 4 breakdown right there. See right here, you have reversal right away, and then it's displacement, and then you have a reversal, or you call doji right there, and then it's another displacement, and then the same pattern repeat itself right there. For today, we take a couple of trade right here. Let's look at the thing we do. We go. Yeah, I think this is the exercise we do. We thought it gonna be breakout, so we buy a 51.08, and we got stop out. That's right. Let's see on the 5-minute time frame. Okay, 5. What the time frame? 9:30. Okay, yeah, we got stop out. Good. It looked like a buy stop, but we make mistake. Do you know why we make mistakes? Because if we treat this level is a breakout level, then it's breakdown level, and then it open below and it retests the high, it's gonna make another move down right there. So we got stop out right there, but we go long right here perfectly, because we see this level and this level, right? It break the level, but it failed to break the level, and the next candle is real down here. If you look right there, we we put a buy stop right here, and we have a heel run right here, but I think we get out around here. We didn't have a chance to target. Actually, we target right here, and then we when we see this candle start to be, we believe that this is supposed to be hold above this, but as soon as it closed out, we get out. I think that's what we did. 14. Yes, so we go in the second trade. We go in right here at 9:30, and we got stop out. We thought gonna be for breakout, gonna move right, but we lost that. But we have this trade right here. So we go in at 10, buy stop 51.025. Oh, okay. I think we get that right. Go in. At 10, gotta look in the chart. So at 10, oh, so we thought that this level gonna be a small level, so it open above retest low and go, but actually we go in at 10, we got stop out at 10.50. Then we retry on the 10.30. That's right, we retry on the 10.30. Where is our 10.30? Okay, right here. So it's the long trade idea, but the first entry not work, right? When we go in at 10 not work, so when we go in at 10.30, we put a buy stop at 50.85.5. That's beautiful right there. You see when it retests that level, the breakout level, and the setup at 10.30 is much more better than at 10, because you have a prior day sell side liquidity were rated, which is this one level. On this you don't see it, but on the regular trading day, regular trading hour, you can see that it rate the previous day. On this chart where we use the regular trading hour, you can see that at 10.30 right here. Yes, it rate the previous day low right there. That's the condition right there. So we have right there, and then we have smart money diversion. We saw diversion between the ES and NASDAQ. So that gives us another confluence right there. You see, at 10.30, this guy, the NASDAQ, make a higher low, but the ES make a low low. So that's the diversion right there. 10.30. 9:45 they also make a diversion, make a high low, then make a lower low right there. So two times that they make the diversion. So we thought it's gonna be really go up high, but it did not. It get rejection. That's how the algo program right there. Yes, so we're going at 10:30 right here, much better. So the same idea, right? After displacement, it can be a doji or follow a reversal, a follow through, or the doji. In this case, the doji, because we see the huge pullback. That's the reason why when it go down here, we put a buy stop right here at this level, because we anticipate it's gonna bow, it's gonna retrace for next level, and it did until we exit the trade right here at, I think right here. When we see this candle, we're glad that we exit them. You know why? Because all of a sudden we saw we thought that we saw the candle flip, all of a sudden it flipped. It's supposed to be go up here and continue to go up, but all of a sudden it flipped because of the, if you recall earlier, Jerome Powell, he speak at, right there at that time. So 13.15 right there. Yes, that's where it flipped. We get out as soon as this candle, forming. We get out. Otherwise, we get back our Hugan right there. And let's see. We did increase our side after we got in here, and right here we increased one more side. I think here's our trade execution right here. By the way, we use Ninja Trader to put, that's our setup right there. We target right here at 21.23 right there. But as soon as we saw it flip, we got out. We are out on that trade. But you see that it did hit that level. Man, that's magic right there. If we can survive this, we can go in and it hit that level. And it's very volatile right there. And right here we make a mistake. We try to go long right here. After the huge two candle right there, we try to go long and we give back out again right there. So we made a mistake because we it like retrace or back, expand to upside, so we make a FOMO trade right there because we see two big candle of break through the open of the day right there. And we jump in, we buy right here. That's a huge mistake because today is a range day. So whenever above the open, we short them. Don't go long because it's not gonna expand far at all because that's how the algo is programmed like that. So we make mistakes. So we keep back some gain right there. Yeah, that's a mistake we make. We should be done after this trade. After the big trade, we need to be done, and have it at a day instead of try to over trade right there and get back out again. So that's an idea. All right, look at how it's moving right here. We record it right there, so you can see that right here. Okay, we go long at okay, so just right here, you remember at 10 we go along right there. We thought that it's gonna be break out, but it did not. You see, so we got stop out at 10, and then we see, wow, look at that. So that is a fall breakout, how it look in the real time right there. And you see push back, it create a doji candle. There's no follow through. So the concept we learned that after displacement, in this case, this displacement break out the level 50.94. Then if this candle is really follow through, it's gonna break this level. It closed below that level, but you look at that, it did not. It looks scary at first, right? Look. Yeah, hold on. Right there. Yes. Oh, one more. A little bit more. Oh. We try to reward. Okay, Just stay right there. So at that moment, we're thinking, well, we put a stop loss, stop right here. Because if it follow through, it will never, hit that level. But if a doji and then a reversal, then it's gonna hit that level. That's our, logic right there, and it did. It looks scary. How do you go in like that? And we did, and the reason why we did, because that's the logic, and also from our observation, when it's the most scary, that's where we need to enter it right there, and it come out good. See that? Yes. Yeah, I did retest the level. The beauty is that you see that candle open above this level and just retest them. And then it go up. You see like that? Huge. Yep. So if we put our target at here, we should be out already, but we put our target almost up here, and then we refine it. We should put right there. Put our 51.23 right there, and you can see that hit that retracement. We're so nervous because we thought that it's gonna make another leg down and take it out, but it did not happen. We're so happy, and look, it make another retracement. It really scared right there, but we decided to stay in the trade. But look what, wow, it retest that level again. Oh, this one is also scared. Look at this. Oh man, look at that. I mean, we didn't move our stop loss. Yes, we moved just right here. But if we move our stop loss too tight, like we used to, then we are in big trouble right there. But we learn our lesson, just be patient, and sometimes we have to bite the bullet to go through the discomforts or the volatilities of the markets. That's how it should do. Yeah. Oh man, we're so happy. And then boom, you see that? Oh, you see that? This candle got flipped around 1 o'clock, and then the 1:15 when the Fed chair Jerome Powell make a statement. This candle right there at 1:15 p.m. got flipped. That's where we get out right away. And you see, get flipped. Looks scary. See that? Wow, it can go up, flip. Wow, see that? Yes, that's where flip. And so we exit out right away to protect our gain, because that's enough. You see, huge like that, man. Wow, you see that? It take the sell side already. So even put stop loss here, we got stop out right away at 10, at 13:30, 1 p.m. right there. And I think we need to take our screenshot. I don't see the right here. Right now. Yeah, so we get out of that. I think we did take a screenshot, but we couldn't find right now. So you see that? It's scary. And then it do like that. And look at that. Wow, it's very volatile right there. See that? And I don't think we engage after that, but look, it did hit the target. Can you believe that? This candle hit those target. So that's our first target right there. If we re-entry and put target right there, it hit our target. Amazing. You see that? Hit that target, and then it go down from there. Okay, right here we make mistake. Look at the 1 hour time frame. We thought that it's a very strong move, so we tried to go long on the next 1 hour candle, which is the 14. 14 hour we go long. Right here, yeah, that's the 14 hour. We thought that it's gonna follow because it open. You see, it break this level and it open above. So we thought that it's gonna retest the level and then it go and rate the buy side, but we mistaken. This is a fall breakout, and keep in mind today is a range day, so the price gonna move around the open. If it's above open, it gonna get retrace back to the open, and if it's below, get back to the open. So that's the whole idea of the doji day or accumulation day right there, and that exactly what happened. And we are giving back out again when we try too hard, basically. Yes, you see, we try to engage right there. So we're going by here, we got stop out, and we try again right here, we got stop out again. So that's the painful lesson we have to learn. But it's part of the process right there. Well, I think we reached our mark right there. So that is the trading review for today. Alright, so let's see how tomorrow it's gonna play out. So today we can see that before we wrap up, let's look at the ICT weekly profile. So look like maybe this profile gonna play out this week. We see the low on Tuesday and it consolidate, then it maybe make a move up tomorrow. It could make sense, or because if we look at the daily table, not table, so here's the daily chart right there. So we have a fair value gap right here. We have a displacement, another displacement, and now it's doji. So tomorrow, let's see. It's hard to tell because it's break down this level, right? And it retest this level and coming down. So tomorrow we're going to walk carefully at this level. You see it's breaking up above this level, create a fall breakout and then sell. That can be another scenario right there. But anyway, we always remain nimble, remain flexibility. If our bias or our theory wrong, then we have to reverse. We don't try to enforce our bias on the markets, but let the market tell us what to do. Even though we do a very diligent analysis, but we have to let the markets tell us what to do. But you see right now the market is in this range right here. Let's see how it behaves from 51.23 to 51.066 right there. Let's see his play out this week. This level is already broke this level. Let's see, it's gonna be fall breakout this level, or gonna be a real breakout. All right, I think that's it for today. We are grateful for this opportunity. Thank you for your time and interest. We do what we love, then success is coming our way. Bye for now and have a great evening.